let's get your weekly update on what's making news on the African currency front. Today, it's the attention of the Malawi and KWACHA that we're focusing on. Jan Duvenage from Standard Bank standing by. Jan, thanks so much for your time. Okay, lots of events that have made headlines in Malawi, but basically we've seen authorities devalue the KWACHA by 10%. Why have they done this, and how's it going to help their position, particularly in terms of forex trading?
Yes, the much anticipated devaluation eventually occurred on Monday from 150 to 165, as you said, is about a 10% devaluation. The previous devaluation was at the end of 2009 from 138.5 to 150. The widely expected devaluation really comes in the wake of widespread foreign exchange shortages, which has plagued the economy since the end of last year, and that has resulted in fuel shortages. There were long queues at petrol stations, people waiting to fill up their cars and their vehicles and so forth, and that of course has been very disruptive to economic activity.
Now,
so this devaluation will go some way towards alleviating some of those foreign exchange shortages, but we believe that it's possible that another devaluation could occur in the next year or so. The reason for that is that the parallel exchange rate is reported to be about 185. So in order to have a market-related exchange rate, one may assume rather that it would have to move a bit closer to the parallel exchange rate.
Let's talk about what this means for Malawi, because they've obviously been battling donors, but they've also been part of an IMF policy review process, and shifting the exchange rate really violates the policy peg that had been instituted. So have they done something wrong here?
No, I think it's consistent with IMF policy. The IMF under the ECF requires that Malawi maintains a market-related and market-clearing exchange rate. And as I said earlier, that the peg resulted in foreign exchange shortages, which implies that it wasn't at a market-clearing level. Now, this move will go some way towards, let's say, patching up differences with the IMF. They, in fact, according to reports, suspended the ECF program in June with Malawi, and one of the main reasons was that the exchange rate was overvalued. So it's possible that this move will set the ball rolling again with the IMF. Of course, a number of donors that contribute a significant part to Malawi's budget would be watching these moves very closely, because they take, I think, some of their opinions and clues from what happens between the Malawi government and the IMF.
What about broader government programs? Because we know that there's been a fertilizer subsidy scheme, seed support, technical support scheme. We also know that tobacco sales haven't been really stellar. So in terms of economic output and what's needed to just galvanize this economy, are they on the right track following all the diplomatic issues that have happened with donors withdrawing, with the IMF also adding its voice?
I think this is the right type of move to have made. Many of those other problems, of course, remain unsolved. The diplomatic spat with the UK has not been resolved. A number of donors have not yet indicated that they will return to Malawi. For example, the US Millennium Corporation had pledged something like 350 million to the power sector. That has now been suspended. There's also been electricity shortages in Malawi, so that in a sense is a big blow for the country. In terms of the Farm Input Support Program, which subsidizes fertilizer as well as seeds to a number of designated farmers, that will be impacted in the sense that, of course, those imported inputs will be more expensive. So the implication is that that program may be scaled back a little bit, but if fuel shortages are fuel shortages improve, or fuel shortages, that will of course have a positive impact on the economy.